Hello everyone. Today the paper that I'm solving is October-November 2023 and it's paper 2 variant 2. Here the first question is based on sales journal, sales returns journal, sales ledger control account, also the account of trade receivables. So here just we'll read the question here. CEO buys and sells goods on credit. He has 3 credit customers and allows one of them, Naomi, a trade discount of 10%. So there's one customer that he allows trade discount to. He does not allow trade discount to all the customers. They're saying all customers pay CEO by bank transfer. The following balances were extracted from CEO's sales ledger at 1st August 2023. So if you guys know, sales ledger will always contain the accounts of all the trade receivables. So Naomi, Sienna and Bhavana, all of them will have their accounts, their personal accounts will be maintained in the sales ledger of Seok. So they're saying here they give trade discount to only Naomi, that is one customer, that is one credit customer. So here we should know something about trade discount. Trade discount is basically given and taken at the time of purchase or sales. So basically given at the time of sale. So whenever we are selling goods to Naomi, whatever the price on label is, you reduce that and you reduce it to like you reduce it by 10%. So why do you do this? Because when some customers, they are loyal customers, the business offers them a trade discount, and which in this case is basically because of customer loyalty or bulk buying. And this is not recorded in accounting. So you always record the price after discount as sales. You don't record the price before discount as sales. So sales will be exactly the price after trade discount. So we'll just do the transactions here. The following transactions took place in August 2023. Sold goods on credit to Naomi, list price 410. So list price is the price on label. So when you're selling goods to him, and the list price is for 410, so basically if you take out 10% of 410, you get $41, which we need to subtract from 410 to find out the actual sales. The actual sales will be 410 minus 41. Okay, so in the first part, basically they want you to make the sales journal. So I'm just taking out entries, transactions that will be recorded in the sales journal. So you guys should know this very well, that sales journal will have all the credit sales of inventory. So whenever we are selling goods on credit, that will be recorded in the sales journal. So all the credit sales of inventory. So yes, sold goods on credit to Bhavana, $89. So this will also be recorded in the sales journal. So this is one transaction for sales journal. This is another transaction for sales journal. Then they're saying Naomi returned goods, list price 20. So Naomi was our customer. We had sold goods on credit to Naomi, and now she's returning goods. So that means this should go in the sales returns journal. So this doesn't go to the sales journal. Then they are saying Naomi paid $423 in full settlement of the amount she owed at 1st August. This will not come in the sales journal. This will not come in the sales returns journal. This is basically for the account of Naomi, which will make in one of the parts of this question. They are saying sold goods on credit 180 to Bhavana. This will come in the sales journal. Then they are saying sold goods on credit to Naomi, list price 230. This will also come in the sales journal. Then they're saying Bhavana returned goods 19. This will go in the sales returns journals. Okay, so what we need to do here is that you need to record the date on which we have sold goods on credit. You need to record the details. So in the details, you write the person's name to whom we are selling goods on credit. And in the amount, you write the amount after trade discount. So firstly, I'll write here August 3. I'll write here Naomi. I'll write here 410, basically list price minus 41. And this will be 369. So students often ask me why they give 2 columns. So you can basically use the first column to show the discount that we have given them. But it's not necessary. You can just use the second column and write the amount after trade discount and show the calculation basically here when you are subtracting discount, right? So you can just show the calculations here and then write the amount after trade discount. Then we have on August 5. So I write here August 5. I write here Bhavana. And Bhavana is not given any trade discount. So you directly record the amount $89. Okay, and then they are saying on August 19. So you write here August 19. You write here Bhavana. Again Bhavana, because we are selling goods to her on credit again. So I write here 180. Again Bhavana, because we are selling goods on credit to Bhavana again. So we write here 180 on August 19. And then I write here August 22. I write here Naomi. Again Naomi is going to be given a trade discount. So I need to write here 230 minus 10% of 230 will be 23. So I write here 230 minus 23, which will give me 207. When I add these all, I get the total credit sales that are made during this month. That was the month of August. I need to write here transfer to the sales account. And this will be August 31st. So what we do is that whenever you are making the book of prime entry, that is the sales journal, you record every person's name to whom we are selling goods on credit. You record the amount after trade discount. But once we get the total, right? So the total over here is 845. This total will be basically posted to the sales account in the nominal ledger, because sales account will always be there in the nominal ledger. So basically when you add these all up, you get the total credit sales for the month, and you just directly post it to the sales account. You don't write the name of the person again and again in the sales account. That is basically the advantage of maintaining books of prime entry, because books of prime entry is like when you make books of prime entry before the ledgers. So once you have done once you have written each person's name in the sales journal, you don't repeat the process in the sales account. You just post the total of the sales journal in the sales account as 845. So in the next part, I need to record so in the question only, they said indicate the ledger account where the total would be posted. So this is where you post the total of the sales journal in the sales account. Okay, in the next part, again they are saying prepare the sales returns journal for August 2023, total the journal and indicate the ledger account where the total would be posted. So the total of the sales returns journal will be posted to the sales returns account. So I write here the dates. So the date for sales returns is August 10. I write here Naomi, August 10. I write here Naomi. And the list price of the goods that she's returning is 20. So we had not sold her goods on the list price. We had sold her goods on list price minus 10%. So when she's returning, that should be also the return amount if the list price is there. So you should reduce it by 10% in order to get the correct amount of returns. So 20 minus $2, because 10% of 20 is $2. So when you subtract these both, you get $18. Then you record this on August 27. Bhavana returned goods $19. So I write here August 27. I write here Bhavana. I write here $19 because she wasn't given any discount. So you don't need to adjust for the discount. You add these both up and you get 37. So this will be basically transferred to the sales account. So you write here transfer to the, not the sales account, sales returns account. So you write here transfer to the sales returns account. And this is basically the total $37. You write here August 31. And that's it for sales returns journal. So in part C of the question, the same question, they're saying prepare the account of Naomi for August 2023 as it would appear in the books of SEOC. Balance the account and bring down the balance at 1st September 2023. So what Naomi is for SEOC, Naomi is basically a trade receivable because he's selling goods on credit to Naomi, and Naomi basically owes SEOC. So Naomi is a trade receivable. Also, trade receivables are assets in accounting. So assets increase on the debit side, decrease on the credit side. So when you start this account, you start with a balance brought down, because in the very beginning of the question they said that the following balances were extracted from SEOC's sales ledger at 1st August 2023, and on 1st August 2023 Naomi owed SEOC $450. So you write this in the debit side. On the debit side of this account, you write here balance brought down and you write here 450. You write here 1st August 2023. And then you need to record the transactions that you had with Naomi. So we had sold goods on credit to Naomi, and then we had Naomi returned goods to us on August 10. Then Naomi paid us the amount that she owed us at 1st August, and then we sold goods on credit again to Naomi. List price 230. So we basically need to record these 4 transactions in this account. So whenever we are selling goods to Naomi, so basically Naomi's account will be debited and sales account will be credited. So you write here sales, and you write here 410 minus 41, you get 369, and this will be 3rd August. Then Naomi is returning us goods on August 10, so you need to record this on the credit side of this account, because when Naomi returns us some goods, then the sales returns account will be debited, Naomi's account will be credited. Also, Naomi, what she owes us will reduce when she returns goods to us. So I record this on the credit side. I write here sales returns. I write here 20 minus 2, that is $18, and this will be August 10. And then she's basically paying us. So on August 11, Naomi paid 423 in full settlement of the amount she owed at 1st August. So basically she owed 450 and she's paying 423, which means that we are allowing her a discount, a cash discount of $27. So cash discount, that is discount allowed in this case, it is an expense for us. Cash discount is 27. How did I calculate this? Basically 450 minus 423. So I write here August. So I write here August 11. I write here bank. So bank will be debited, Naomi's account will be credited. I need to write here 423. And then I write here August 11, same date, August 11, discount allowed. I write here $27. So discount allowed itself is debited because discount allowed is an expense account. You record this on the credit side in the customer's account. Then we are selling more goods to Naomi on August 22. So I need to record this on the debit side of this account. I write here 22nd August. I write here sales, and then that will be 230 minus 23, that will be 207. And then you need to calculate the balance carried down. Of course, the thing is that balance carried down is always calculated by subtracting the total of light side from the total of the heavy side. So heavy side in this case is the debit side, and then the light side is basically the credit side. You get a balance carried down of 558 here, and this will be August 31. So basically this total was 468, this total was 1026. So 1026 minus 468 gives you 558 balance carried down, and you total this account 1026 on both sides, 1026. And this balance carried down basically becomes your balance brought down. This will be 1st September 2023. And that's it for this account. In the next part, they're saying on 31st August, Siog decided to write off the amount owing by Sienna as an irrecoverable debt. Then they're saying prepare Siog's sales ledger control account for August 2023, balance the account and bring down the balance at 1st September 2023. So if you guys know this, that you should also know this, that sales ledger control account is total of trade receivables account. So the balance brought down in the sales ledger control account is the total trade receivables at the start of the month. So when we see the total at the beginning, we have 450 plus 155 plus 386. These were the 3 trade receivables at the beginning of the month. So you record this 991 balance brought down. You write here 1st August 2023. You write here balance brought down, and you write here 991. So that will be the total of trade receivables at the start of the month. Then basically this is total account, so you need to post all the totals of everything in this account. So this account is basically also increases on the debit side, decreases on the credit side, because it's trade receivables, and trade receivables is an asset. So here when you record sales on the debit side, this is the total sales that you have made in one whole month in August. This will basically be credit sales. So also one more thing, the source of information for the sales ledger control account is always books of prime entry. So we had already made the sales journal here, and the total here was 845. So you need to record 845 as sales here. 845. This is total credit sales that we made in the month of August. Then we also have made the sales returns journal here, so you need to record this on the credit side. Sales returns journal total is 37, so I record this on the credit side of this account. I write here sales returns. I write here 37. So sales returns basically reduces our trade receivables, because when the trade receivables return as goods, they owe us less than after returning. Then you need to record the amount that you have received in the bank. So the amount that we have received in the bank is one that we had received from Naomi, that was 23. Also, we had received some amount from Bhavana, that is 400. She paid 400 to us. So 400 plus 423 will give us a total of 823, which is what we have received in the bank from our trade receivables during the month. So I write here 823. So we also had discount, given a discount to Naomi here, cash discount. We haven't given it to Bhavana. So you write here discount allowed, and that will be 27, because the discount that we allowed to Naomi was $27. And then they're saying the amount owing by Sienna should be written off as irrecoverable debt. So I need to record this on the credit side of this account. I write here irrecoverable debts. I write here 155. So basically, whatever is happening in this trade receivables account is whenever trade receivables is increasing, you're recording that on the debit side. Whenever trade receivables is decreasing, you're recording that on the credit side. And this is the trade receivable account. So in the details, you write the name of the other account that is being debited or credited. So like in the case of irrecoverable debts is being debited, trade receivable is being credited here. So now you need to calculate a balance carried down here. So I write here balance carried down. The debit total is 1836 and the credit total is 1042. So when I subtract both of these, 1836 minus 1042 will give me 794. And the total of this account will be 1836 on both sides. This balance carried down will become balance brought down. So this basically balance carried down is on 31st August 2023, and the balance brought down is on 1st September 2023. So that's it for this question. Thank you so much for watching.